This week, is my stock market 20% summer rally still in play? Is gold going to break $4,000 this year? I break down why I think it will. And crude oil reached my target of $74 in 1 week. Also, cocoa, sugar, and the dollar index do just what I said they would do, sort of. Welcome to the Trading Pit, personal investing tools and techniques for the active trader and investor. I am Lundy Hill. This is not financial advice, and I am not a professional financial advisor, and past performance is not necessarily indicative of future results. Here are the charts that caught my attention this week. Let's start off with the ES 4-hour bar chart. Last week I highlighted the potential cup and handle pattern pointing to higher, actually much higher prices. This week had a small sell-off. I guess war in the Middle East will do that. The breakout of the handle occurred on a lower MACD on the 4-hour chart. That's shown at the bottom of the chart. Hence, it was a divergent top and a hint that now is not the time for the rally to take place. I'm not saying we're going to fall, but we might have to do a little backing and filling and retest the highs. Price did find support at the lows on Friday and closed well off the lows. Friday today. Today is June 13th. That's a constructive sign, closing off the lows. ES is in the buy zone, so I would try to buy momentum coming into next week. The Dow Jones was weaker than the S&P and the NASDAQ. It reached down to its upsloping 50-bar moving average on its 4-hour bar chart. I don't have a chart of that right here. This makes sense as the Dow Jones is the market of the world's largest and most liquid investors, and the world is in turmoil now. The U.S. is in turmoil, but the world is in much more turmoil. Next, let's look at the VIX. The VIX broke above its 50-bar moving average on its 4-hour chart. I don't have the 50-bar moving average here. And this occurred with confirming MACD. Note that the MACD also formed a divergent bottom Friday and Monday, last Friday and Monday, around $16. This could have been a great time to take a nibble long. A few percentage point allocation of your overall portfolio to act as a hedge. Next, let's go to the metals. Here is the silver 4-hour chart. Silver had some follow-through up to last week's yum breakout up. The 4-hour chart, however, might be forming an island top. This is my pattern 1 of 9 patterns which might form a top or a bottom. Note the gaps in the move up. This is a classic textbook on gap play. Number 1 is the breakaway gap. This is the first gap of a move. It breaks away, breaks out, and starts up. Number 2 is the mid gap, the runaway gap. That's the midpoint of the move. And then finally you have the gap marked 3. That's the exhaustion gap. That's when people finally succumb to the pressure and they buy, but the smart money that got in early is selling to them. And note that the island top formed after the 3rd exhaustion gap. I don't like shorting silver personally, especially with it trading above its long-term moving averages. Zooming out to the daily and weekly chart, I get the feeling that this is just a pullback to the first wave up. We broke out and that's the first wave up, so this is the wave 2 reaction. I'm expecting a wave 3 primary thrust up, followed by a wave 4 correction, and then the 5th and final wave up, and I still have a target of $43 on silver. Maybe a test of the lows at $35.50 will come into play. Next, let's look at gold. Here is the gold weekly chart. This week, gold had its highest weekly close ever. Highest weekly close ever. That's at $34.33. $3,433 an ounce. Isn't that amazing? The recent reaction of 4 weeks ago reached just past the Fibonacci 38% retracement level of the move up from the low this year to the high this year. So I believe gold has a better than 50-50 chance of making new all-time highs soon. A Fibonacci extension of this move puts the upside target on gold at above $4,000 an ounce later this year, later summer, early fall of this year. Finally, let's go to crude oil. Crude oil was a big mover overnight as Israel bombed Iran, and I guess Iran is coming back, so crude oil could really scream. Last week I highlighted, well, actually here is last week's chart. I'd noted the breakout to multi-week highs, and I had a target of $74 on there. Now let's go to this week's action, and we see price did in fact, well, it broke clear through $74, closed right around $72.91. You had the exhaustion move up to 3. Note the dramatic run-up of the MACD. I think that tells us that higher prices are still in the works. We're going to have a little reaction here, possibly to the 50% point, which I have marked around the $70 level. Also, I've labeled a possible 5 Elliott wave pattern here. So we've had 5 waves up. It might be time for 3 waves down to that 50% in the form of an ABC pattern. But this is an event-driven market now, so trade carefully. Next, let's look at corn. Corn did pretty much what I thought it would do. It did test the lows. The support I highlighted last week held. This support is a long-term lower trend line stretching back to March. Corn reached and held at multi-day highs after testing those lows. Actually, it broke those lows by a couple of ticks. I expect a test of the down sloping line around $4.50 a bushel. And I think a break above that and corn could rally up to $4.80 a bushel. On to cocoa. Last week I said the 2-bar flip-flop outside bar down. You see that at the high there towards the end, the high of that V top around June 6th. I said that outside bar down on this 4-hour chart could send prices down to the congestion area around 9,750 or lower, where we gapped clear through that. And I said cocoa up at those prices was in no man's land, meaning no position, and that turned out to be exactly right. Cocoa had a huge gap down Tuesday with plenty of follow-through down, almost reaching $8,750, 1,000 points below my 9,750 target. Prices fell back into the high volume area at the beginning of this chart. You see all the back and forth. So that's a lot of buyers and sellers in that area between 8,500 and 9,000. So I think cocoa will form a possible ABC pattern here. And then who knows? I still like it to the upside. I still think in the inflation play and the global deglobalization play is also working. Next, let's look at the dollar. 2 months ago, I highlighted the dollar index and its break of its major support. That's in the lower red line at around 101. I gave a target of 94 on the downside. That's the high of the congestion zone, not shown, but in 2021. Dollar index this week reached fresh 3-year lows. So that's never bullish. So I still like the 94 on that, and you can expect support. Next, let's look at sugar. Last chart of the session, let's look at sugar. Similarly, a month or so ago, I highlighted a similar breakout to the downside in sugar. It reached and broke through a multi-point horizontal trend line. That trend line has 4 touch points, 5 points maybe. And you had a downside breakout, and I said lower prices are coming. We went down this week. We've gone down 5, 6 weeks in a row. I think that is bearish, and I expect lower prices still. I think sugar could go down 3 or 4 cents from here. I hope you enjoyed this. Thanks for watching. Please like and subscribe. Again, my name is Lundy Hill. I'm a lifetime veteran of the commodities market. My father was a trader since 1955, author. My brother and sister are well-known traders and money managers. Again, let me know if you found this content helpful.